Welcome. It's Monday, 2 p.m. GMT. Welcome to the news episode of the Blockchain Hustle. My name is Dirk Hartig. I've been an investor and trader for 25 years. And in fact, today I want to talk a little bit about what is happening currently on the markets. If you've been following the markets today, you probably have seen that we are looking at quite large red numbers today, with Bitcoin being down, well, currently just 8%. We're trading here at $53,000. We went actually all the way down from the last top we made here at about $70,000 by 30%. So the low was trading roughly at $49,000. Well, should I say so far today? We don't know yet. We still have, of course, some way to go. And initially, the plan for today's show was that we look at some crypto charts together. We look at, some promising charts, some crypto assets I would rather leave my hands off. However, I think it's more important today to address a little bit the current situation and look at what actually caused this crash. Because from all what I've seen so far today, the real reason for the crash is not very much actually talked about on mainstream media. I don't really like that word, mainstream media, but I don't know how to put it in different words. For example, here the Financial Times writing prices of stocks and other risky assets, which obviously are also cryptocurrencies, plunged on Monday as a sell-off that began last week accelerated after Friday's weak US job report stoked fears of a recession in the world's biggest economy. And guys, this is a bit funny in my opinion to write something like this, because this was like for a year now, almost the missing ingredient everybody was waiting for. The Fed was still waiting for a weakening job market in order to justify to have rate cuts. Well, this is what we had now for the first time really in numbers, which gives the Fed the justification to lower the rates in probably September of 2024 by 25 to 50 basis points. And this is supposed to be kind of like the explanation that the markets are, accelerating to the downside at the moment. I highly doubt that. And I kind of want to share my theory, what I think is really going on behind the curtains. And because for that, we need to look at Japan, actually, and not the USA. And then we're kind of trying to string everything together that by the end of today's stream, you have an idea what really is going on behind the curtains. And guys, it's really... for me, it's a mind-baffling example, once again, of what especially institutional investors are allowed to do. Because you might have noticed, and at the beginning, I need to, go a little bit into the stock markets, especially into the Japanese stock markets and the Japanese yen. And later, don't worry, we're going to tie it back to Bitcoin, why this is happening. And of course, answer, also the question, is this actually now a good a good range to buy here, or should you expect lower prices still? Also, if you have questions, please feel free to shoot them into the chat. I'm not sure if you can do that if you're watching this on Twitter, or X is it called here, but I should see your comments, at least when you're watching on YouTube and Twitch, I think. So if anything's unclear, if you have questions about certain assets or the general situation, feel free to ask those questions. I'm going to circle back to them later. If you're watching a recording of this later on, of course, also feel free to leave a comment, like, and subscribe. That's the only real method that the algorithm starts noticing us here at TradeDelicious. So I said it already, the worst losses we saw actually on the Japanese stock market. So in the worst period of time from the top. We just recently saw in the Nikkei, we went down by almost 28%, which is really already a major stock market crash. And this just within basically not even 2 weeks. Things, of course, also looking dire here today at the Wall Street. Right now, price is recovering a little bit, but also here from our tops here in the S&P 500, we have come down by 10%. So where does this deviation between the 30% we saw in Japan and the 10% we so far saw in the S&P 500 and other indices of the world outside of Asia stem from? Well, in order to understand this, we need to look at the Japanese yen and especially dollar yen. And I know this was talked about, of course, this morning also already on our live stream. We've seen the Japanese yen plunging down now by 12.5%. And if I say plunging down for dollar yen, that means, of course, that the yen has gotten stronger, which is a serious move for a major currency outflow. This is something actually like 30 years ago you didn't really see. Now, in order to understand what caused this and why this has a ripple effect to other risk-on assets, especially stocks and cryptocurrencies, we need to understand what was going on, why actually we saw this large movement since pretty much early 2021, where the Japanese yen has been going up from roughly 100 yen per US dollar to, at the top now, 162 yen per US dollar. So that's a 60% depreciation of the value of a yen that we've seen here. And this stemmed from something that a forex trader, an institutional forex trader, would call a carry trade. A carry trade is that you buy a currency that currently has a higher yield and higher interest rate, and you sell the currency that has the lower interest rate for it. And this spread of interest rates is especially high between the United States dollar, the US dollar, where currently the interest rate is obviously at 5.25%, and in Japan, where we have an interest rate of 0.25%. This means if you buy US dollar for yen, a forex trade, when you go long or you buy US dollar yen, that means nothing else that you buy US dollar, sell yen. Or you could say also you take out a loan in Japanese yen and you get US dollar for that. You exchange that loan into US dollar. And this has been a very profitable thing to do. I want to show you how that works. Actually, let me quickly change here to another one. Hold on a second. I have something prepared there for you. Here we go. This is the thing I want to show you here. So I should edit also there. So I know that looks a little bit boring, probably like Dirk talking here about some Excel or open office document, but believe me, guys, this is actually very important what's going on here. And in order to really understand also why we are seeing the slump on the market that we are currently witnessing. So as I said already earlier, there's a rate difference between Japan 0.25% and the USA 5.25%. Now you could go, for example, say, you know what, I want to take a loan in Japanese yen. I'm going to borrow 1 billion Japanese yen and exchange them to US dollar. So, for example, at an exchange rate of 158, maybe I did this. So I got for my 1 billion yen, 6.3, slightly over 6.3 million US dollars. For that, I have to pay interest, of course, interest. I have to pay interest for the Japanese loan. If I got this for the 0.25%, it's a bit simplified, of course, this example, but hear me out. I would pay 2.5 million yen per year in interest. At this exchange rate of 158, that would mean I have to pay about 16,000 US dollars of interest every year. On the other hand, if I just deposit my money with a bank and I manage to earn what the, so to say, risk-free interest rate at the moment in the US is 5.25%, I would earn 332,000 US dollars in interest from the US dollar I deposited. So I'm making $316,000 every year on money that I borrowed. I borrowed Japanese yen, exchanged it to US dollar, and invested those US dollars. So that's great. That's like, this is called a classic carry trade. And as long as because everybody was seeing like, oh, this is actually very lucrative at the moment, so I'm going to do this. This caused demand for US dollar and supply for a larger supply for Japanese yen, meaning that the price over time was going up by those 60+% that we saw at the top here. Now, the thing about human beings is that we all tend to be, of course, a little bit greedy. And that's not only true for us so-called retail traders, that want to make some money off the markets. This is especially true if you run a hedge fund. Because you could get the idea now and say, you know what, instead of being satisfied with those 5.25%, I want more. I want to invest the money I borrowed, my 6.3 million US dollars, not into treasury bonds, so I'm not getting the 5.25%. I will buy stocks for that. And we saw that especially happening, for example, with tech stocks. Why with tech stocks? Because we've seen, of course, really miracles happening there over the course of the last 1.5 years. If you bought Nvidia there in late October 2022, so not even 2 years ago, and all the way until the top, you would be up like almost 1,200%. So one could, of course, say during this time here, well, I'm not going to invest the US dollars I got from my loan here in Japanese yen. I'm not going to invest that into the boring 5.25%. I'm going to buy Nvidia shares for that. So, for example, maybe I bought just recently at 135 US dollars. I could have bought almost 47,000 US dollars, 47,000 shares worth 6.3 million US dollars. Some did the same with Bitcoin, bought maybe Bitcoin at 72,000, maybe 88,000 Bitcoin at 72,000. So this is my money is now invested. And this actually turned out to be a very, very profitable strategy for a long time because the Nvidia shares went up. And it all would be good if, for example, now they would stay at a price or be at a price of 180 US dollars per share. And if Bitcoin would be at 95,000 US dollars, because then I would have made a profit of slightly over 2 million US dollars on both positions, return on investment between 32 and 33.3% here. And remember, this is on borrowed money. So this is insane. And by the way, this 6.2 million US dollars, you can probably add another 2 zeros to kind of get a grasp for what is going on with institutional investors here. They're not even touching something with 6 million. We're more talking about 630 million US dollars here. So they probably could have been sitting here at 200 million US dollars on profit. You're a smart hedge fund manager, you're happy, your clients are happy, you did this with borrowed money, and everybody's happy, you get a nice salary of maybe 30, 40, 50 million US dollars. And this goes well for a couple of years. Simple strategy, and just because you run a large hedge fund, the banks actually give you a loan like this. If you try this as a private person with a bank, they're probably going to chase you out of the window. Now, the problem is, what happened now recently with the correction in shares, especially in tech shares, is that the price of Nvidia is not trading anymore at 180 US dollars, but Friday it closed at 107 US dollars, and Bitcoin is trading at roughly 53,000 US dollars today. So instead of having these insane profits, you are suddenly sitting on a loss of 1.3 million US dollars if you invested in Nvidia, or 1.7 million almost if you invested into Bitcoin. And what is going to happen now? Of course, the bank is not going to be satisfied with you saying, hey, you know what, it's like, trust me, bro, and things are going to go up again. This is not what they want to hear from you. They're going to approach you and tell you, you know what, if you want to keep your position open here, if you want to keep your loan in yen that you currently owe us, you need to transfer more collateral to us. Collateral meaning basically things that can secure the position. Usually they want something like cash. So if you could transfer like 1.3 million US dollars in cash to them, or 1.7 million US dollars in cash if you bought Bitcoin, everything is fine for the moment. But since the greed is so high, most of those hedge funds, institutional and large private clients out there, they don't have that money currently available to give as collateral. So they eventually forced to actually sell their position. And usually the selling then comes at the worst possible time, really. And because, just give me a second here again, I need to always flip back and forth here. Here's the chart I want to show you, because that usually happens when the markets are at their lowest, meaning like when you see Nvidia trading here at below 100 US dollars. This is when everybody is forced to sell. It's a bit like everybody trying to get through an elevator at the same time, and it's a bit like you have a fire getting out of control, and instead of pouring water onto it, you pour gasoline onto it or oil onto it, making things really worse. So this is really, really a big problem. And in my opinion, it's such a big problem because it showcases two things here. That institutional investors, especially hedge funds, they don't really care about the small guy out there. They are allowed to do things that you as a small person would never be allowed to do. Like I said, go to a bank and tell them about your idea, and they're probably going to say, you know what, not going to happen, buddy. We're not going to trust you. When you are like a smart hedge fund manager and you go to a bank, they're probably going to tell you, hey, you only want 1 billion yen? How about make that 10 billion yen, and then really get things going. And then everybody wants to exit the market at the same time, or is forced to exit at the market at the same time. And this is why we see such, things overthrowing really at the market. So the crash, my opinion at least, stems really from there, from forced liquidations. Of course, like thinking about something like a recession, like bad job market, bad economic data, then makes things only worse. This is the gasoline really that comes onto the fire. Now, the question, of course, is here, is that it now, in terms of Bitcoin, 53,000 US dollars, was that it? Is this a good area to buy now? Are we going to see prices plunging down even further? Should I buy Nvidia now? Should I again here go long US dollar yen? Well, the simple answer is long term. Probably the answer is yes. This might be a good area to buy. Short term, you never know. Is this going to stop now? Or in terms of Bitcoin, was below here already at 49,000 US dollars, or are we going to see the next days Bitcoin, the price of Bitcoin, attacking 45,000 US dollars or 40,000, or maybe even lower? This is something nobody can say at this point, and simply just don't listen to anybody who thinks like, oh, I can call the bottom yet. Especially if I start in a situation like this, doing some technical analysis on Bitcoin. This is like not worth the ink on the pen, so to say. However, if you still believe like that long term we are going to go higher, and if you have watched me here on TradeDelicious or on my own YouTube channel, or you're following my Twitter, the link you find, by the way, at the bottom in the description of this video to my Twitter, you know that I'm very, very bullish on Bitcoin. And I just want to point out here, things like this we've seen plenty of times. Last time, especially prominent when we had COVID, which was this dent here. In the grand scheme, I think it doesn't look so bad, where we went down very quickly from 9,000, slightly under 10,000 to under 4,000 US dollars, just to jump up again. Not saying this needs to necessarily happen this time, but if you look here long term at my logarithmic regression chart, this lower band, as price is approaching this lower band, this usually always, historically speaking, not usually, this always has been a great long-term chance to buy Bitcoin. And I stand by my analysis that I did in the very first show here at TradeDelicious, that I expect late October, early November, or latest February of 2025, when we're going to see a massive, massive bull run to the upside with prices north of 100, with prices north of 150,000 US dollars. I would be very, very surprised if we don't see that, honestly speaking. And you might, of course, call me biased now. I obviously didn't see that coming so much because we had the slump in dollar yen before, and it didn't cause so much trouble, in my opinion. Well, the difference was back then we still had better prices for tech stocks also, or not as much leverage as we've seen here recently. But I would be very surprised if we are not seeing prices up. And you can see here also, once again, by the way, why it's a good thing to be invested in Bitcoin. If you have a choice of Bitcoin versus altcoins, why it's good to be invested in Bitcoin. You saw here the Bitcoin dominance going up again. By the way, I think we need to see 60% first in order for the bull market to really kick in. If I say bull market really kick in, I mean the bull market frenzy. If you have been invested in something like Dogecoin, for example, I mean, look at this here. Yeah, we are still anyway far away from the almost 75 cents we traded there. We are also recently from the highs we made here in March down by 59%. So obviously you would have lost a lot of money. So in times like this, it's a wiser choice probably to stick to your guns and buy Bitcoin. We can see here currently there is, as it seems, a lot of buying power around 50,000. Still, of course, it needs to be shown if this is sufficient already or if there's more danger around the corner already. Russell making a comment here. Thank you, Russell. July 18th, the Bank of Japan intervened. Yeah, absolutely correct. We can see this also. Well, let me switch back here. I have really too many charts open sometimes. Let me switch back here. We saw this here in July beginning. So this was the beginning of the end, if you want to say. This also showcases like that central bank is like the most powerful entity when it comes to the currency markets. There's a saying amongst professional currency traders that you never trade against the direction of a central bank. And we see here, obviously, why that is the case. I mean, they have tried to intervene, or they intervened a couple of times before that, however, never as successful as this time. I don't know what your opinion is about this. I don't have any exposure in yen, so for me personally, I don't care. I know that a lot of viewers are trading the yen. I hope you weren't hit into the wrong direction. Probably we are seeing a lot of liquidation right now. Yeah, but this is what's going on at the moment, and it's severe for sure. But I think if we will look back in a couple of weeks or months down the road, we probably will see, hey, you know what? These were actually great chances to buy the market. And once again, you might have people then telling you something like, well, you're lucky you bought Bitcoin at 50K when it came crashing down. I thought it was going to 45 or 40. That might be the case. As I said, I cannot promise you, of course, that this is going to be the low. Maybe also I'm completely wrong. I mean, that's always a possibility. I don't think I am, but it is a possibility to be prepared for. One thing is for sure, the cryptocurrency markets never bore us. And well, cool. I'm seeing here I've been shorting yen crosses. That's very good. Nice one, man. Congratulations on that. So you think it's going to continue probably then. That's really good. As I said right now, one thing is for sure. Probably this is a crisis that's going to go past again and everybody will forget about it again. I can well remember that was like 15 years ago when in Europe, a lot of people bought real estate, but instead of buying in euro, for example, they took out a loan in Swiss franc because the interest rates were much cheaper. And then the same thing happened that we kind of see now with the yen. Eventually, the franc became much stronger, and people were actually losing the real estate, were losing the houses because they just couldn't afford to be in that mortgage anymore. And that's the sad thing. This is This is what I've been hearing also, by the way, 120 yen. But we have to see still if they are really succeeding with this long term. Because, the central banks are the strongest entity for sure. But we've seen this also with the Swiss franc, by the way, where the Swiss National Bank didn't want the euro Swiss franc conversion rate to drop under 1.2. And then it eventually did, and they just couldn't hold onto that floor or cap and floor this anymore. We saw like crazy days where we saw a 20% appreciation versus the euro within just a couple of hours. So careful out there. It can as well very fast also go to the upside again. For sure, going to be very exciting. For my day trading, I'm staying at the sidelines a little bit. It's for me actually too much volatility already. I want to wait until the markets come at least a little bit down again. So for my appetite, seeing price swings in Bitcoin like 12-13% in a day, that's already also a little bit too much, not to start talking about altcoins, obviously. All right, guys, this is it for today. So a little bit something else than I initially planned to do, but I think it's important really to kind of understand and have a look at what is really going on. And it's not as simple as, well, everybody's expecting a recession suddenly. No, you have to see like what is going on in terms of institutional traders. And you really have some big guys that are being liquidated at the moment. And I'm very nosy how the rest of the week actually will continue. Probably the markets will be heavily eyeing new economic indicators coming out in the USA. We're going to touch base on that, of course, again on the next episode of a Blockchain Hustle, which is going to be on Thursday at 2 p.m. GMT again. Until then, stay safe out there. Remember to always use a stop loss, and happy investing. Take care and bye-bye.